traders, Greg here with a market update. Okay, so the big news overnight was the Fed Powell's speech last night. Anytime Powell speaks, it is important because he can move markets. But look, the market last night going into Powell's speech, wasn't too worried for the simple fact that we had a Fed meeting recently, and the market thought that there really wasn't too much that Powell could say that was new. But having said that, he did move markets. Going into Powell last night, the market was undecided on the next rate cut by the Fed, and they had priced basically that the Fed would cut rates by 50 basis points and 25 basis points as a coin flip, 50% chance on each. Powell came out last night and he basically said that his base case for the next two meetings is a 25 basis point cut. So he pretty much ended that debate. And we are not going to see any more 50 basis point rate cuts by the end of the year. So on the back of that, we saw a spike in US bond yields. So we saw US 2-year yields, US 10-year yields spike up, over 10 basis points each. And immediately we saw a US dollar rally across the board. So, Euro failed again above 112, which has been a big technical resistance. We saw dollar yen, which is very sensitive to US bond yields, rally 200 points. And we also saw gold, for $40 on the day as well. So look, what does it mean, for trading US dollar? Look, I think for longer term, not a lot. I think that, by the end of the year and early next year, we will see a lot lower levels for the US dollar. But I think in the short term, Powell pushing back on, aggressive, rate cuts now may slow down the speed of, the US dollar selling off. Now, equity markets, on the back of Powell's comments, they did have a good spike lower. S&P traded as low as almost 5,700, but it did not last long down at those levels. And in the last hour of trading in the aftermarket, we saw an aggressive spike back up for the S&P to close back up almost 70 points to the high of the day. So, buying the dip in equities continues to work. And equities, are obviously in a sweet spot at the moment. We also did have the last day of September, so month-end trading and also quarter-end trading. September seasonally has always been a bad month for equities. The last 4 years in a row, we saw US equities in the red for September. But this September, we saw S&P actually close up 4.9%, so it had a great month. Nasdaq, which normally has led equity markets higher, finished up 1.9%. But the market that outperformed everyone was China. It was up a whopping 12% for September. Now, yesterday also we saw a very strong close in Shanghai, where we saw that up 8%. So actually for the last week, Chinese equities have been up a whopping 20%. Look, Chinese markets are closed today, as is Hong Kong. So we're not going to see Chinese markets again until next week because of the Golden Week holidays. But the market that we will be focused on today in Asia is the Nikkei. So the Nikkei bucked the trend of global equities yesterday and actually fell almost 5%. And that was on the back of some political changes in Japan, where the new Prime Minister is seen as more positive for raising rates in Japan. So we saw dollar yen lower on the back of that, and also the Nikkei well lower. But I think after what happened overnight with US bond yields spiking back up, and the fact that we're not going to see a 50 basis point cut from the Fed anymore, dollar yen now has regained some of those losses from overnight. So there's a good chance we might see a rally in the Nikkei today. Other than that, the only thing on the agenda today is that we've got some retail sales figures in Australia for the month, and they're supposed to be a positive up from the previous month. Aussie dollar's been doing exceptionally well. A lot of tailwinds behind the Aussie. We've been talking about this a lot. So I'd imagine that on the back of some good retail sales figures, we could see the Aussie higher. But Aussie certainly has been a sensational buy on dips, and we are still targeting 70 cents in the short term at some stage for the Aussie, and much higher levels by the end of the year. I hope you have a fantastic day, and we'll check in with you again soon.